What's up, guys? It's Joe here. As some of you may know, um, a few of my calls on Bitcoin have played out perfectly over the past few days, and I thought it would be good just to go through my thinking behind why I chose these levels and, um, some historical reasons as well as to why I chose these levels. So we're just gonna start by putting this fib retracement in. I'm not going to comment on it, but I'm just going to leave it there for now. So let's draw some trend lines in from price action last year. So we've got these. This was something that I didn't see too many people draw, and it's not something I would recommend you draw in first. But as you sort of look at the graph a bit more, you'll see this trend line is actually respected quite a few times. So we're going to draw that trend line going through here. That's now support, so we can turn this to the right color. Also going to draw this trend line, which is a bit more important. This is a sign that's more respected and something you'd actually be looking at. The other trend line for me is just some more trend line bias to reinforce my trade. So as you can see, we get a good two tests of these two support lines anyway on the support and resistance, and the most important one, the one where the reason I was targeting these levels is this fib retracement here. So we've got this high here, and we'll go to the low here. And as you can see, the 1.618, as I went through my previous lecture, where you'll see a lot of algos and a lot of big people taking profits, was here. It was here just near 8.6k, and the high was 8.3, 8.4k even. And so there's a reasoning behind why we didn't exactly get over it, or we didn't hit it on point, and that's because this is the first run of the bull market. This is the first parabolic move of the bull market. There's plenty more to come, but this is the first move, and a lot of bag holders, pre 6k and in these sort of buy zones here, and they're going to want to take profits on their positions, and even underwater longs that were been buying in at 6k, like all the big players, they were done buying here. They didn't even have much money left over to buy these. This is discount Bitcoin. Most people are in at the true market value, which is here. And so you're going to get a lot of people taking profit before we even get to the 1.618, because people are going to know that people are going to be looking to take profits here. And not only that, but there is also other resistance points here. I mean, if we draw in a liquidity pool, it's quite clear, very clear on this graph. I'm just going to go on a larger time frame so I can see the candlesticks a bit better. So we go here, we take the top wick here. Well, so we've got the wick here, sort of marking a technical level. We've got the, sort of leaning into here. Oh, my bad, I'm targeting the wrong level. So if we go up here, we've got this wick. But this here on you can see that it's clearly respected quite a few times. There's one there as well. Draw it. I may as well just copy that. Oops. Got that wick there. I've just got the peak of here. So, that's a clear technical level, very clear technical, and then you've got the wick of here. So, my top buys would hopefully be, we've got this wick here. So I'd really, max sell point, I'd be looking there. That would be my liquidity pool here, where I'd look to be exiting or even short selling. It's pretty amazing we even managed to get there anyway. Anyway, so going back to this whole move, if we take a fib a fib level from the low here. Well, I mean the low here and the low here, it's going to come out the same anyway. But let's go here and then let's try the bottom as well. So if it's looking a bit overcrowded, I'm going to get rid of it in a second. So if we take the whole move up from the bottom, from the low here, and now we've got some clear levels to look at. We've got this trend line coming up here, which is pretty important, which has been respected for months last year. And you can see there's a little retest here, so it's also been respected in this bull market. We've got this trend line coming down, less important, it's really not that important, but it's good to look at. You see this test here, and we've also got, if I had to draw a liquidity pool, it's very strong. So we find the wick of this, so we were kind of looking there. We go to the wick of here, this would really be, and this is, I'm pretty sure this was my buy zone that I posted to you guys, all the way down to 6.1k. This is, if you look at how many market turning points occurred in this buy zone, it becomes quite a clear level to buy. And look, it wicked into it perfectly, because you've got buy pressure from this trend line, you've got buy pressure from this trend line, you've got normal support and resistance buy pressure from this wick, this wick, this wick, all this sort of this is a market turning point. You see it's come into this liquidity pool and it's had a short-term trend reversal. Yeah, it was only up to here, but it still had a short-term trend reversal. You see it break through this liquidity pool, and it retests this liquidity pool and changes its short-term trend down, and it breaks through it, hovers above it again, and the market's unsure. This is a classic pattern that I'll go through. It's a reclaim pattern, where you sort of get this price action occurring like a shoulder. It kind of looks like an inverse head and shoulders. This would be the head, comes back over, reclaims its price level and pushes up. That's a classic reclaim pattern. But anyway, so you've got the market turning in short-term trend reversal when it comes into this liquidity pool, moving up. Comes back here, short-term trend reversal up here, back here, short-term trend reversal up here, and then the volume starts to die down, and we're sort of stuck in this liquidity pool. The market can't make a decision of where it wants to go. Let me just draw this trend line in as well, because that actually looks like it might have been respected perfectly. Yeah, so you've got another trend line here coming in, but you've got buy pressure from there, and obviously strong enough buy pressure as well. You also have this 382 Fibonacci level, which, when the market's bullish, you're going to be looking for bounces off the 236 and the 382. And that's where my two clear buy zones I showed you guys were. And, my main, I was mainly interested in 6.4k, but I was skeptical as to whether we'd see it, because, you've got this 236 Fibonacci level, which, historically, bull markets have been signified by a break above this 236 Fibonacci on the whole of the sell-off from December 2017. The Fibonacci come all the way down here, and this is the first test of any Fibonacci level ever in this new bull market, if we are in a bull market, which it seems like we are. And basically, historically, whenever it's come to the 236, it's just gone straight through it, and it's come down to retest it, and that retest would have ended up around here. If I had to draw a liquidity pool, this would be my buy zone. I'm pretty sure this was the one I drew. So I was actually a buyer in this price zone. I split my buys into two. I had 50% at 6.4 and 50% at 7k, 7.1k. And as you can see, we've wicked into my lower buy zone, and we've come back up, and I'm sort of in small profit here, but average down, my profit's a bit less, but this is a 12% move from the wick within. I didn't even have to do anything. I just woke up this morning, I was up 12%. You can't argue with those kinds of profits. So, this is just a good example of using the Fibonacci to measure how bullish a market is. If we're testing, we've wicked to the 382, which is bullish in its own, and then we've accumulated and stayed above the 236. So that's it. That's inherently bullish. Inherently bullish. This. There was no chance below 6k. This was This was smart people buying in Bitcoin here. This was, this might be the lowest. We might see it for the next year. I mean, we might never see this price level again. I wouldn't be surprised. And I'm just going to go over why. I'm going to show an example of the 236 of this whole sell-off being respected in previous bear markets as well, because it is a very important thing to look at, because history repeats itself. It's not always the same, but there's a good saying, and it's that the markets never repeat themselves, but they rhyme, and that's true here, because I'm not quite sure how far we can go back on this chart, but we'll be looking at the 2015 bear market and how we came out of it. So again, we've got the high here in December, and the low here, made in January 15. So we can take a fib level from here to the low. Okay. So if we had to place ourselves on the chart where we were, this would be pre 6K. This would be pre 6K. This would be 3.5, 4,000. And look, so we've come up here, broken the 236 level, and come straight down. And we've retested the 236 to a degree, and we've come straight back up, and we sort of sat above this 236 level. And that was the indicator for this market of the trend change from the bear market to the bull market. And I'm sure if I got this up, we retested the 618. So again, that's this is a more of an infant market. People aren't aware of what if Bitcoin might do it again, so they're unsure. So people are getting in at the 618 because that's probably the best buy zone. If we had flip reversal into a bull market, the 618 is going to be the healthiest retracement. It's a healthy bull retracement, and this is where the market would be getting in. And as soon as the market saw this strong reaction off the 618, this is going to be a strong bull indicator to most traders to be buying the dip in the future, and that's why we get this symmetrical triangle forming, and then this eventual break of the level, which is what I imagine we'll probably start seeing on our Bitcoin chart as well. So yeah, it's good to show some perspective. And if I don't think I can go back 2030. Yeah, maybe I can go back. Yeah, so if we get this, I'm not quite sure if this is going to be. I think this is a bad example. The 2011 example is a bit better. If you go from top from here down to here, I mean, again, look, this is 3.4, 3K, and this would be 6K. We've come through it, straight above it, hit the 382, bounced off the 236, clear wick in the 236, which is what we've just had. And the market's trend up from here. We've never seen these price levels again. So this is what I imagine is going to happen again. But this is a more infant market, so everything happens a lot quicker. Less money can do more in this market. Whereas the market we're in now, we're seeing 140 billion market cap. Less money is not going to do much. We need big players in Bitcoin now. But history does repeat itself. So I really wouldn't be surprised if this was the trigger for the start of the bull market. So, I think it was important for me to go through some historical reasons as well as some, recent reasons as to why I was targeting these levels and why I was an interested buyer at these levels. But anyway, so if you'd followed these calls, you'd be up 12% non-leveraged already. I got some leverage, some really tiny leverage longs in, but I closed them out this morning, and it's just an extra couple $100 hairs to spend on myself. So, I hope you enjoyed this, and I hope you understood everything that I went through. If you didn't, just make a suggestion in the suggestions channel, and I will go through it in a more advanced way. Thanks for listening, guys. I hope you have a nice day. It's Joe.